Most business owners I meet aren't struggling because they're bad at what they do. In fact, many of them are exceptional operators, craftsmen, problem solvers, and leaders. They deliver projects on time, keep customers happy, and know their industries inside and out. And yet, when they go out looking for capital, it feels like running into a brick wall over and over again. You walk into a bank confident, and weeks later, you get a denial that makes no fucking sense. It feels personal, but it's not. Nothing about this current lending environment is personal. The truth is, the system changed faster than business owners were told. Today, you aren't sitting across from a banker who knows your name. You're sitting across from an algorithm that doesn't care how long you've been in business, how hard you work, or how many people rely on you. It makes a decision long before a human even glances at your file. And once you understand that, funding stops feeling like a mystery and starts becoming something that you can influence, control, and eventually master. What I want to do today is show you the part of your business most owners never look at, the foundation beneath everything. Because getting funded in 2026 is not going to be about charm, collateral, or handshakes. It's going to be about the digital fingerprints your business leaves behind. Think of your business like a building. The visible part, your sales, your team, your customers, that's the structure above ground. But the approvals come from the foundation underneath. And most denials happen because the foundation was never intentionally built. I'll give you an example. A contractor named Lewis came to us frustrated. 2 crews, steady backlog, profitable jobs. On paper, he was everything banks claim to love, but he kept getting denied. When we opened his file, the problem was obvious. His business and personal spending were completely mixed together. He'd buy materials right after a personal grocery run for his family. Payroll withdrawals sat next to Amazon purchases for the house. None of this made him a bad operator by any means, but to an algorithm, it looked unstable. So we separated everything, cleaned up the rest of his fiscal year in financials, and suddenly his foundation reflected the strength of his real business. He was funded shortly after. And I want to pause here because this is where so many owners beat themselves up. They think a denial means the bank doesn't believe in them. They think it means they're doing something wrong. But more often than not, it simply means the digital version of your business isn't matching the real version. You might be running a structured, disciplined operation, but if your data doesn't show that, the success doesn't translate. And in this modern AI algorithm-based system, perception is reality. You deserve access to capital that reflects the hard work you've already put in. Sometimes it's not about becoming a better operator. It's about helping the system see that you already are one. And here's the part most people never think about. Even the label you put on your business can sink your chances before you begin. Your NAICS code, the 6 digits that tell the government what you do, is one of the biggest silent killers of funding. I've watched excellent businesses accidentally classify themselves as high-risk industries and wonder why nobody would touch their file. One client ran a small manufacturing shop, right? Stable revenue, long-term contracts, receivables coming in on deck, solid margins. But her NAICS code labeled her as a used car dealer. That one mistake cost 2 years of rejections. We corrected her classification, rebuilt her foundation, and the approval started rolling in. This is why so many business owners feel like the system is working against them. It's not working against you. The data just doesn't match who you really are. Once the foundation is aligned, you stop fighting the system and start working with it. Now, let's talk about the score most business owners never hear about until it's too late. You know what your personal credit score is, right? But business lenders, especially SBA lenders, look at something called the FICO SBSS score. It ranges from 0 to 300 and blends your personal credit, business credit, and banking behavior all in one. And here's the quiet rule that changed this year. Many SBA lenders have raised the minimum score they'll even consider to 165. If you score 165 or higher, your file moves forward in the underwriting process. If you score even 164, the automated system kicks you out and you land in manual underwriting, also known as the graveyard of applications. The good news is your SBSS score is one of the most fixable parts of your foundation, and people really don't know this. A landscaping company we helped had tons of revenue but 0 business credit lines. Their SBSS was way too low for SBA eligibility because they never built their business credit. We opened 3 vendor accounts that reported, added 1 business credit card, and within 90 days their SBSS jumped enough to qualify for a 6-figure business loan through the SBA. They didn't earn more money. They didn't change anything operationally. They simply became more visible to the system. This brings us to one of the harshest truths in modern lending today. Your bank statements, your real everyday cash flow that goes in and out, are now one of the most powerful parts of your file. Lenders used to rely solely on tax returns from, the most previous year and the year before that. Today, they connect digitally to your bank account and AI scans your statements in seconds. It doesn't look for your story, it looks for patterns. Does your balance stay steady, or does money vanish the second it arrives? Do you overdraft often? More than 3 or 4 overdrafts or negative days in a month can automatically disqualify you from prime funding. Do you have high-risk transactions like gambling or crypto? The algorithm picks up on these instantly, but here's what business owners don't get enough credit for. Most of these issues are easy to fix. You just need time and intention. Give yourself 60 days where you maintain a stable balance, eliminate overdraft, stop personal spending from touching your business account, and keep everything clean. You're not trying to make your business perfect. You're trying to make your financial picture match the real stability you already operate with. So, once the foundation is strong, your structure clean, your score high, and your statement stable, then you choose the right funding tool. And this is where many business owners get hurt because they don't choose tools, they react to emergencies. There's more capital available today than ever before, but the good money moves slow and the fast money moves expensive. SBA loans, they're long-term, stable, affordable, and predictable, but they take time. Fintech loans, they're fast, money in as little as 24 hours, but expensive. This is why your foundation matters. Without it, you're stuck in a cycle. Denial from the bank, then panic, then taking a high interest loan, then cash flow stress, then more denials, and you need more high interest loans. But with the right foundation, you can follow what we call the scaffolding strategy. You start with small, accessible credit, maybe a modest line of credit or equipment loan. Use it responsibly, build your business credit and SBSS score, keep your statements clean, and then use that improved profile to refinance into longer-term affordable SBA funding. I'll give you a deeper story because I want you to really feel how this works in practice. A few years ago, we worked with a business owner. Her name was Diane. She ran a family restaurant, good food, loyal customers, tight margins, like most restaurants. She'd been denied for funding 3 times from the bank, and she felt defeated, not because she didn't qualify as a business owner, but because her financial foundation didn't tell the truth about how resilient she really was. We helped her start small, a $40,000 line of credit, nothing crazy, enough to get a little breathing room, catch up on vendor bills, and stabilize her weekly cash flow. She followed the plan, cleaned her statements, organized her accounts, built her business credit slowly and intentionally. She did the right thing. 11 months later, she refinanced everything into a 10-year SBA loan that cut her monthly payments almost in half. Her stress dropped, her confidence grew, and she added 2 new employees. And for the first time in years, Diane felt like she was driving the business instead of being dragged by it. That's what a strong foundation does. It doesn't just get you funded, it changes the way you move. Now imagine your own business 6 months from today. Imagine waking up and not checking your bank balance in fear. Imagine payroll not being a weekly emotional roller coaster. Imagine knowing exactly what your file looks like through a lender's eyes before you ever apply. Imagine having long-term capital instead of quick, expensive band-aids. Most business owners don't need more hustle. They don't need more hours. They need structural clarity, the kind that makes lenders see what you've really built, not what a messy digital snapshot suggests. If you're still here watching right now, that tells me something about you. You're not just looking for money, you're looking for understanding. You want clarity yourself, you want strategy, you want to know how lenders see you before you ever apply. So here's what I want to offer you: a funding blueprint session. Not a sales call, not a pitch, a diagnostic. My team and I will underwrite your file exactly the way that a lender does and show you what's helping you, what's hurting you, what your SBSS score is likely to be, whether your NAICS code is hurting your chances or helping it, what your bank statements say about your operation, and the exact steps you need to take next. You'll walk away with clarity whether you want to work with us or not, because once you can see your foundation clearly, everything above it becomes easier. Hiring, growth, equipment, expansion, stability, confidence. Click the link below. Let's fix the foundation, raise the structure, and put your business on solid ground so the next time you apply for funding, the system finally sees the business you really built. Let's get to work.